This should be coming through loud and clear. I'm just going to bring you all up on my second screen so I can watch the comments. And we will get into talking about market cycles. Perfect, cool. Hey Dark, hey Simon, Skynet. Narratives drive markets. We are live. Hey Glenn. Okay, so as you can see on screen, we're going to talk about some bigger picture stuff. I know recently I've done my videos about market cycles. I'll just bring a few of those up now. And we're going to talk about where price is going, possibly short term, as well as longer term, because that's what everyone wants to know. But more importantly, what have we actually learnt from the previous cycles? Are you going to make the same mistakes again? Do you have a plan? That type of thing. So guys, if you do share these videos around, hit that like button. That does help that YouTube algorithm, and comment away. That all helps. We know YouTube loves to promote certain content over others and whatnot. So yeah, all you guys watching the whole video, liking, commenting, that all really supports the channel and hopefully helps our network grow and helps you guys and get that message out to the wide world. Because one of the things we're going to talk about tonight is that the biggest opportunity in lies with the 99% of people that aren't even in crypto yet. And we often forget about that, particularly maybe the trolls, and we're picking on individual coins. Gold community pick on the silver community, they pick on the crypto community. We often forget that if we want to get that other 99% of the world interested in these assets, we need to, really portray a good picture. Okay, so we've got over 100 watching already. I love it when you guys can all join us for these live videos. Let me know if you do like this format around this time of night. Once I've put Louis to bed, had tea and whatnot, hopefully this does give you a chance to tune in. And often when there's a lot of news articles breaking, it tends to be the best for me as well to sort of digest all the news all day, do my other work and then decide what I want to talk about with you guys. And we found that a lot in a bull market, that is the best method for the most up-to-date news, because in crypto sometimes you record something 12 24 hours later, it's out of date. And we do like to be first. We're lucky that we're on the Australian time cycle. A lot of the news does happen, or in the last cycle it happened around that Asia Pacific time. A lot of the news came out of China. So yeah, we are lucky that we can jump on live when exchange hacks happen or China bans mining or whatnot. That was really timely during that last market cycle. So I'll just give everyone another 15 seconds or so. We've got over 124 watching, guys. That is awesome. Negative interest rates will help Bitcoin, says Skynet. Dave Warner, different Dave Warner, I think, from our cricket opening batsman. Hey, Alex from Adelaide, met you at the cinema. Cool. Thanks, Dave. That was an awesome night. And I'm sure plenty of you have seen that that film documentary Cryptopia that's going around. Not about the Cryptopia exchange, actually about crypto itself. So I've got 140 watching. I will get into it. Okay, guys, so today we are going to talk about cycles, what we have learned from previous market altcoin cycles, alt seasons, whatever you want to call them. And this is a historical snapshot from back in 2014. And we're going to talk about why this is really important. If you have a look at the top 10 or 20 there, you might not recognize too many of those names. So I just want to start off by saying that I think it's becoming clearer and clearer from the videos that we've done about the 4-year cycle, even tying in things like the gold and silver market and my macroeconomic sort of predictions in stocks and what central banks are doing, as well as the general industry update I did about what I think is going to happen for crypto industry in general. It's becoming clearer and clearer that we have likely put in a good long-term bottom. Way back at $3,000, but then again more recently, if we do zoom in, let's take that off log chart there, when we dipped down and we hit that 6,400-ish sort of level. And that was a level where a lot of people were waiting for and hoping for, and it just made sense when we had the volume profile up on the chart. Let's just bring that up quickly. Favorites, volume profile, visible range, cool. So when we have a look at where we spent a lot of time throughout that bear market, and just oversimplifying things, this has become like a mini cycle from that big 2017 pump and then dump we had. We had a big run up, and we came back and we touched almost perfectly that level where we did spend a lot of time throughout 2018. So I'm not going to make this video too much about TA tonight. It is going to be more about the data, the psychology, the sentiment, and more importantly, why people make the same mistakes twice. And I know I say this a lot, that I've been through a lot of these cycles now, but I want to talk about the mistakes that I made even a second time around. Because a lot of people are thinking to themselves now, when everything pumps, I'm going to sell, I'm not going to do what I did last time, but it's not that easy. So I just want to start off by running through this example and talk about everything that I look at. So our approach, my plan, this is a cheat sheet that our members get. We look at the fundamentals, the technicals, the sentiment, and these days more and more of that is sort of overlapped with all the other data that we can pulling this all together. So these things are very, very researchable for Bitcoin, and as you go down the list, it does get a little bit harder, but there's still a lot of good stuff you can pull. And just by doing a little bit of research, you can be way ahead of the herd when you're looking at your coin. So if we go back to this historical snapshot, we can see the top 20 back in January 2014. There was a bit of a mini alt season plenty of times here. So we can see something like Peercoin was up 70% this week. Namecoin up 60%. Primecoin 70%. Netcoin there 86%. So these things aren't new. When people say, "Oh, alt season was a one-off," they're just wrong. It's already been more than a one-off type of thing. So the first takeaway, what can we learn? What do I really want you guys to make sure you don't do again in 2020 or 21, whenever that season is? A lot of people are now sitting on coins that are down a long way from their all-time highs. This is CoinGecko. You can click on all-time high and it tells you how far down your coins are from all-time highs. And just because something is down doesn't mean that it's better value. So let me give you an example. Something like Cardano has actually had some positive news recently. A couple of upgrades, a bit of a partnership, and it's pumped really hard. But when you think about it, it's still down 95%. But nothing's a given for any of these coins that they're necessarily going to get back to all-time highs. Now, I think the good projects are going to, because good protocols themselves, they fall back on their fundamentals, which are the network effects. And if your coin has that utility, people are talking about Ethereum as sort of economic bandwidth to power DeFi. So if DeFi grows, that token is going to be required. Bitcoin's got that, that store of value. We're hoping we can get the network and micropayments and other layers as well. Then we go down the list. XRP is trying to do their thing, disrupting payments. Bitcoin Cash, Bitcoin SV, they are experimenting. There's a lot of dApps and development happening. They don't have the store of value sort of aspect of Bitcoin yet, but there's a lot of experimenting going on with all these other coins. So I don't want to go down the list. If you are interested in that video, I will actually do a video where I run through the top 100 and tell you what I think about all of them. So if that's of interest to you guys, let me know in the comments below. Other things that we do for specific coins, a new service that we actually want to offer is letting people choose what coins they want to research. So something like this here, if I just click on research, refresh, this is our 5 fundamentals report where each month we do a deep dive into 5 coins. But one thing that we'd be possibly looking at doing going forward is people can request an actual deep dive research on one project. So I'm not sure the price point of that, if it's something that we'll do on top of this and expand it. But yeah, I think that the amount of data and everything we have at our fingertips these days to do more and more research, it's definitely something that is doable. It's just a matter of time and resources. So going down this list, what am I looking at? I want the first thing for you to learn is that nothing matters how much a coin is down from all-time highs. Because if we go back to this snapshot, after this first altcoin cycle, the boom and bust, do you think people were dollar cost averaging into, Peercoin and look down this list? There's probably only the top three there that really sort of survived and thrived or went on to make meaningful new all-time highs, or that you would have been happy buying. So plenty of people that got excited about Namecoin and Peercoin, and I've spoken about ones that I FOMO'd into, Aurora Coin back in the day. It was no good buying it because it was down 95%, then 97, then 99. You're thinking, all it's got to do is just get back to, down 90%, and I will have made so much money because it's down 99% now. That is not how it works. And the only thing you need to be looking at is that market cap, the value. So even people just get so disillusioned with price, and I think there's a definite reason why some of these coins put out projects with low prices. Not picking on XRP, but I think that is one of the reasons why coins like XRP, even Tron to some degree, they deliberately create a really high supply because they want their coin to appeal to noobs. They want to see this coin that's one set. And when people weigh up whether they want to buy, they can't even afford a Bitcoin because they've only got $5,000 to invest, or they can buy 50,000 or 500,000 of this coin that's 1 cent. It makes them feel good. It makes them feel like, if this just goes to $1, it's going to go up in value a lot. But the market doesn't owe you anything. The market is not just going to go up because of all-time highs. And the lower the coin drops, the more you need that network effect, that exponential growth for you to get rid of your bags in future. So if a coin goes down 99%, you need 10 times as much money to come in from that current value to get it back to all-time highs. Whereas once a coin goes down 99%, that price is now the value that the entire crypto community has labeled the fair value for that coin. So at that point in time, the market doesn't owe you anything. It's not going to go back to break even just to let you get out of your heavy bags. It needs 100 times more money to come back in to give you that break even, just to get back to all-time highs. It needs to do 100x from that price once it's down 99%. So a lot of people fall into this trap, and I see this a lot when I'm doing one-on-ones and helping people with their portfolios or the coins they're hodling. So many people say, but this coin's down 99%. I should buy this. I'm better off buying this than a large cap coin. But there's a reason that coins are down that far. And it's often because they haven't made the progress or they went too high in the first place. So really, when you're looking at value and price that you're paying for a coin, I really want you to focus in on the market cap that you are paying for a coin. That is the most powerful metric, because when we look at the market cap, I've spoken about the Bitcoin, how high that can go in terms of its value and compared to gold and Forex reserves. But can these other network effects capture value? Is this coin that you're looking at, is that deserving of a $1 billion market cap? And I would question that some of these still don't have good user-friendly wallets. Do these projects have a mobile wallet for you to send coins to? Do they actually have any apps that people are using in the real world, or is there just a few apps where people are tinkering and playing games? Do you have a multi-sig wallet where you can actually do some proper security to store your coins, or are you just waiting on Ledger to add your coin to it? And that's the only functionality that it has. Some of these still don't really even have functioning smart contract capability where developers can come along and build something through an API on these chains. And remember, all this was huge promises back in 2017. Here we are sort of 3 years later, and some of these still haven't launched. So they're the things that you have to think about. A lot has changed. In terms of staking coins, Dash did really well because if you had a masternode, you could get rewards. That was very unique in 2017. Where now, every man and his dog is launching these staking coins, and they're paying out huge rewards, trying to get people to come to that network. And all these people that are staking are likely just going to sell the coins that they're getting paid to buy more Bitcoin. So you've got to think about all these things, all these functionalities, and that is one of the reasons that we do all that analysis there that we talk about. So that's kind of the first takeaway lessons. This is a big write-up that I did for our members just an hour or so ago, and I'm just going to whip through it quickly. I do these long write-ups every week, maybe every 2 weeks, just to let people know sort of what I'm thinking. And these live updates we're doing every month in our members group, where you can ask any questions you want. We can cover any topics. You can request that in advance as well. So basically, everyone has seen this Wall Street cheat sheet about that emotion, and a lot of people have now coming to the end of the full cycle. Now, a lot of people maybe bought at the peak and they got out of the crypto space, but a lot of you have probably seen it go from start to finish now, and we're entering the start of what I think is the next major cycle. And without giving too much away, I actually do think that there's a high probability that the next market cycle could be the biggest yet. And when you think about it, once Bitcoin passes $20,000, we now have everyone that's in the crypto space, which is for the first time ever a significant number of people. So let's call it in the millions of people that invested in 2017. Now, a lot of those got burnt and have lost money. Now, at the point when all those people flip positive, or even if they sold, they say, oh, geez, Bitcoin wasn't a bubble, I shouldn't have sold, and they start to get back in. Then you've got 100% of people that are now positive about Bitcoin and telling all their friends, as well as all the public awareness. I think someone mentioned before in the chat that that Bitcoin was on ABC News tonight in Australia. So all those things start. We get the momentum with the FOMO, and it's just basically green skies ahead. And now a lot of people here are hodling. We've heard that stat that something like $100 billion worth of coins haven't moved in over a year. And this is the only market where, it's not like the stock market where people are looking to get a 10% gain and then they're really happy for the year and they're going to sell. People believe in Bitcoin and they've seen it do these 10x or 100x moves over 1 year, 5 years. They very much believe that Bitcoin can go to $100,000 in that next market cycle, and they're gonna hodl there, and there's going to be people that sell too early, and then it pulls back a bit, and then it takes off without them. So all those things are going to unfold. And in terms of the macroeconomic policy, the negative interest rates, the trillions of dollars, the bond market, the stock market, housing market, there is just so much money sloshing around the world, even more so than sort of 2-3 years ago during that last bubble. More on-ramps, a lot of reasons why Bitcoin can surpass those highs. Now, is other money going to altcoins? Yes, I definitely feel that the structure of the market at present, there's a lot of relationship and a lot of piggybacking off Bitcoin. So when we go down our list of all these different coins, you look at the exchanges they're on, and as a general rule, the large cap coins, the top 10 or 20, they're all on all major exchanges. And then you could say that maybe the top 50 are all on the next tier. So the Binance's, CoinSpot in Australia, maybe KuCoin, and that's why that the big money flows the most to the large ones. And then there's going to be people that speculate down that list. Now, for the first time in crypto history, we've now got a lot of coins in the top 50 that are tradable on 100 times leverage. So I just want to point that out next, that when a coin like Cardano moves, 15%, or Ethereum Classic today is up 15%, for example, that's very different than the last market cycle when people could only buy Ethereum Classic and make a 14% gain. Now, if I'm trading on leverage, a lot of these coins are paired against the US dollar. That's one of the reasons why I do like and trade on FTX. You can trade Ethereum Classic on 50 or 100 times leverage. So it's no longer just a 15% move. There's traders out there that have caught this move on 10 times or 100 times leverage, and they're sitting on enormous profits, and they are going to sell in the short term. So people don't like that, but it's actually a stabilizing mechanism. It saves us from having up 100% days and then down 80% the following day. It makes it so that these 10 or 20% moves are maybe going to be capped a little bit, but also means the downside is probably going to be capped. It's kind of stabilizing and getting rid of the big whipsawing once these coins that are liquid and traders come to them. And price discovery is actually really important. So I don't have any problem with trading if the underlying asset, the real asset, is being traded. And a lot of these exchanges require you to hold Bitcoin or crypto or other coins as collateral. So as long as the crypto space grows and their collateral grows, money's going into the system. That's very different to derivatives and cash settled products and whatnot. So I still believe that people are going to look for altcoins. Originally, I was sort of thinking that now Bitcoin has 100 times leverage and a lot of trading availability, people aren't going to seek the altcoins. But the way it's shaping up at the moment, I think that, well, the next cycle is going to be the biggest ever because, yes, you've got leverage, but you've also got leverage on the things that moved more in the first place. So if you're on the right side of these, it's actually very possible to make 1,000% in a day, which wasn't really the case back in 2017. So obviously 90% of people are going to lose when they start margin trading because they don't have any idea or plan or technique or strategy. They haven't done any courses. They don't understand TA. So hopefully by now, a lot of you have been through that process where you've got a bit of a plan. Are you going to trade only on the days when, it's been a green week and we're positive in terms of being above the moving average or the Bollinger Bands, whatever your plan is, but it's very, very possible to make large returns, and that's probably what I'm excited for. So let's talk about some of the things that I got wrong in the last market cycle. So starting off here, this was back in December 2017 when this was a couple of days before we peaked, and I posted about how we'd made life-changing amounts of money. I recommended people had been pretty concentrated in the top 3 at that stage. For risk-reward purposes, and everyone was starting to get really greedy on social media and bragging. And I said that over the years, this has probably been one of the best indicators on when to take some profits. And we did take some profits. A lot of people in our group took some profits, but we didn't sell everything. Or, in hindsight's a wonderful thing. But I think the thing that stopped me having conviction at that time was this is the first cycle where we'd been surrounded by people. Crypto was pretty lonely up until then. It was sort of, you have your friends and family and you share some posts in a Facebook group or whatnot. But a lot of people, for myself, you become a bit of a public figure, and it feels really good. And the hard thing about buying when it's low and crashing, or selling when it's high and peaking and continuing to go up every day, you feel like it's wrong. And the most important thing is getting out of your comfort zone. So it's never going to feel comfortable when you're doing the right thing. So, I wish I probably had pushed this point home more about taking profits, because I got messages saying, you said to take profits, but the next day it went up, or the next day after that it went up. And it's not really a day-to-day thing. It's sort of saying, well, if you look back now at the chart, literally that week, of the 11th of December to the 18th, and I posted right in the middle of that week. That was the week that we topped, but it felt so uncomfortable to tell people to take profits. And one of the things that sticks out clearly in my mind, I was still playing cricket at the time, and we had a lot of our cricket team, guys that knew nothing about crypto, were FOMOing in big time. And you hear those stories when I watched all the documentaries about stock market bubbles and research. You hear the stories of when the bellboy's telling you to buy stocks, and when tradies are buying stocks, that's the top of the bubble. When we had tradies in our team talking about buying Litecoin because it was pumping, and I literally remember thinking to myself, this is a bubble. This is what a bubble looks like. Everything I've read about in history. But still, it feels so uncomfortable to think that at the time because it feels so good. Now, the next example here was when we bottomed, and this was at the 30th of January, and we had bottomed a few weeks before, but I did a video when Bitcoin was around $3,300 talking about this Adam and Eve pattern that could play out. But at the time, even I didn't have strong conviction, because once again, on the 30th of January, it feels really uncomfortable to be telling people that you think it's a good time to buy it. A lot of people, nearly everyone, had consensus that we were going below 3,000 or going to 1,000, or at the time there was this hyperwave theory floating around where, whenever you have a huge run up, you go all the way back to where it started, and people were talking about, $1,000, $1,300 was definitely where we're going. And I think, without naming names, the people out there saying that it was a 99% chance that we're going to $1,000. So to go against that trend, and remember, at this stage, all the bears, they look like geniuses. So saying that, hey, I think there's actually a chance that we've had that stage of disbelief and anger and whatnot, and now we've had the capitulation, the final part, and I think we're forming a bit of a high here, this Adam and Eve pattern, and we could be bottoming. That felt really uncomfortable, and even saying that in the group at the time didn't get many likes, and people were saying, oh, you've been positive on Bitcoin, you're saying it's going to go up, longer term, time and time again. So really, really uncomfortable. And again, it's hard to have conviction because it just feels so uncomfortable at the time. Next up was when we hit 3,800. And if you look at the chart, I was speaking about how this has just gone parabolic. And these things typically don't end well. Now, that doesn't mean that we can't continue to go parabolic like we did here and go up for another week, but generally, have you learnt your lessons? If you've made life-changing amount of money, this is the time to take some profit. Don't do what we did last time. And once again, whenever we go up this steep, this quickly, it doesn't end well. It has to unwind. Once again, I didn't think that it was going to unwind for whatever it took, 6 months, 7 months. So that's why we like crypto to take the stairs higher and go slowly. With these parabolas, that's not good technical market structure and doesn't give it strength to fall back on. So zooming out big term, long term, we have come back and touched this region, and I actually think this is a really good market structure that's starting to turn positive. And I put that tweet out today on the monthly chart. This is starting to look incredibly bullish. This is a 3-candle reversal pattern in the world of stocks where we have gaps. This is normally known as a morning star, where we have this next candle engulfing the entire body of that previous move down. So look, if we close up here in the next couple of days, that's basically just another green flag. We've got the momentum traders. We've got the guys that were looking for a higher low on the monthly in terms of the trend. We've got the moving average traders, and then we're now above the 200-day moving average. More and more of these people are coming over to the other side of the boat where they're being positive and they're going to buy the dips and push the market higher. But more importantly, I think we've seen the first signs that there's new money entering the market. So we just had our biggest month in our crypto community. I think we have something like 50 or 60 new members. So that's the biggest month we've had for a long, long time. So it shows me that new people are entering the market. And finally, this was more recently when people were saying, well, are we going to go lower? A lot of people talking about 3,000, and we spoke about, I think we did a live video on YouTube at the time talking about how, when we use these Bollinger Bands, it tends to mean revert when we're getting outside the Bollinger Bands. The other thing we're looking for, I think at that stage, was just to come back and revisit this 61.8 fib level and for another entry if you didn't get in at 6,400, and that came down there perfectly again. So look, we have had some good runs. We have gotten some stuff right, as well as getting a lot of things wrong over the years. But I just wanted to drive home that message that when the time comes, when we go parabolic, when we're at 75,000, 100,000, once we get there, the price targets are going to be telling you that, well, we're going to $1 million, and there's going to be all sorts of reasons and videos and clickbait justifying why Bitcoin is going to $1 million. So it's not going to feel comfortable and the right thing to do to sell. So these days, we've got all this data. I wish we had all this back in 2017, and hopefully this helps us nail it. I've touched on these websites a few times. Some of them have free stuff, as well as paid premium tiered memberships. Glassnode, the Thai, Sentiment. I do have premium or pro subscriptions to all of these, and we do share that in our group as well. So look, I hope you guys have enjoyed that one. Have you learnt your lessons? Were you buying when it's low? Are you starting to see how that fear and greed index and sentiment drives markets like I always talk about? Have you got a plan for how you're going to sell when the Bitcoin network gets clogged in future and fees rise? Are you going to call a broker? Have you got a way to get your coins safely from where they're stored to an exchange? Is that exchange liquid? Do you have an account limit on that exchange that you're going to find out when you're trying to sell $50,000 in a hurry? That is why I actually tend to like brokers like Hivex and Calvin Brown. Again, for the guys in our group, we have a discount, and if you're selling over $50,000, just send me a message and I'll give you my personal broker's number. But they're the sort of things where people just are in a panic during the top of the market, whereas I just want to pick up the phone and sell and have that money in my bank account straight away. Have a bit of a plan. So yeah, this was a little bit more of a bigger picture analysis. In the short term, a lot of people, I'm definitely getting the sense that a lot of people missed that bottom at 64, and now they feel that they have to FOMO in. Whereas if we look at this chart, let's just throw our Bollinger Bands back on. This is the time when we're probably likely to get a pullback. So we're bumping up against some serious resistance. Let's just get this in the middle of the page here. In terms of the weekly, 9,600 is probably this this last level where we're going to be putting up a bit of a fight. So we did find resistance on the weekly a number of times back here, and more recently here. So around that 9600, that is a very, very key level in the short term. My preferred method would actually be getting a bit of a pullback from here on that daily where we're overbought on the RSI. And overextended on the Bollinger Bands. I'd actually like us to get a bit of a pullback from here. I think that would be far healthier in the short term than just blasting straight through it and starting another parabola. But in terms of the longer term strategy, none of that really matters. Hopefully by now you've got your HODL stack, your long-term holdings, your dollar cost averaging. You've worked out what's best for you if you are going to trade. But we don't know if things are going to have a bit of a pullback or if we're just going to continue straight to 14,000 and beyond like we did last time. And that's why, for the majority of people, you should hodl and think about long term. So I hope you guys have enjoyed that. Have you learned something? Let me know in the comments below. To join our group, head over to nuggetsnews.com.au to get all that research and all that extra material we do produce. Otherwise, smash that like button, subscribe if you haven't already, share this video around, and I'll talk to you again soon. Cheers.